I want to draw a connection of something, and I'll address this question. So when you said that you're using other people's money, or OPM,
Yeah.
You are borrowing money out of someone's IRA. For those of you that are the IRA or the 401k holder, you are being the bank. So when you go into a bank, who makes the terms? The borrower or the bank? The bank. Yeah. So when you move your money from, retirement, not retirement, but stocks, bonds, mutual funds, where you have how much control?
None.
Zero control, over to a self-directed account where you are the bank and you are in control and earning those types of returns that, let me make this clear, are secured by real estate, a tangible investment that is also insured. Are you doing something riskier over here or less risky?
Less.
I would say less risky. It's secured by, you have recourse. Why do banks all around this country lend on property? That's the security of it. It's tangibility that's securing it.
You can literally hop on the internet and pull up whatever real estate you're investing in off of multiple websites. And you're going to dig through a plethora of information if you're trying to pull up the company that you've put stock in, that you've purchased stock from. I mean, it's just the simplicity of it is incredible when you're thinking about the real estate.
Yeah. I mean, you're taking, pretty much gambling. You have no control. I mean, someone could be having a bad day in the boardroom, or have personal stuff that they brought into the boardroom, or, have some ding dong go on social media and tank that stock, which tanks your account.
Yep.
And that's just not okay. And I'm not ever saying put all your eggs in one basket.
Right.
But you need to be more intentional and smart. Put your money on yourself. Trust yourself a little bit more than just, I went to school, I got a 401k, and I'm just buy, holding, and hoping it's there at the end of the day. I find more and more that they're questioning that, because the old mentality of it was it's all tax deferred. That Roth I keep preaching about, that was only born in 97. It's not that old. So our parents are all tax deferred. I can't tell you how many couples I work with that are close to retirement that have nothing in a tax-free account. And the taxes are much higher than they ever thought would be. Well, the old mentality was, you're going to be in a low tax bracket when you retire. Chris, is your goal, busting your butt as an entrepreneur, to be in a low tax bracket? Can I just ask that question?
I want to be in the highest tax bracket as possible, but I want to have real estate and other things that help me write off that tax. Yes. Like these IRAs and everything else you're talking about.
That's exactly it, and you're investing in depreciable assets. So again, I'm not a CPA, but a lot of firms in our industry won't touch this stuff with a 10-foot pole, but you have to. They're tax sheltered accounts. We are governed by, the IRS, Internal Revenue Code, 590 A and B are like our big chapters.
Yeah.
Okay. To your point. So what is the max you can contribute to a Roth IRA yearly for an individual? If you are under 50 years old, $6K. Well, $6K. If you are over 50 years old, $7K. You get $1,000 catch up.
So somebody's probably sitting there saying, well, dang, that's not very much. That's going to take forever for me to build something. So I would like to touch and just give a personal experience here that I was taught as well. I've got a business, right? And we post our kids, because I do have kids. I have 3 of them. I have 2 with my ex-wife and 1 with my current wife. All right. So I have 3 kids that I want to make sure that have a great retirement set up as well. So I was able to open these accounts for them, and I was able to pay them as spokespeople for my company, because my company has got professional photography and everything. And then we post them. Yeah. I mean, I'm looking at in the background as well. Right. So who doesn't like a person that has kids? Because now you're relatable. So that's why I want to post, hey, here's my family. Here's what I work for so hard. Now I've got multiple accounts that I'm able to keep more money that I have earned and not have to give as much to the government, because I have multiple accounts I can contribute to. And not only is it helping me, it's also building that legacy for my family.
Yep. And what you just said there, it's a multitude of accounts. But there's ways, because I get that question all the time. What am I going to do? How am I going to buy a property or be a private money lender? You want more than $6K. Right. How does that work? There's 3 ways, guys. Outright, You can partner accounts together,
Mhm.
and you can also leverage with retirement accounts. And most don't know this is more of the strategic part. This is where, the guru part of my comment earlier
Yeah.
comes into play to show you how to really maximize all of these accounts together in a very keep it simple fashion and investing in what you know. Because where you have more control, you have better results.
Absolutely.
That's, I think, a universal statement in investing, in business, in parenting, marriage. I mean, you name it. Where you have more control in process and systems and good communication, you have success. And that's exactly it. And that's the nice part about what we do here is we're an educational platform, guys. So I'm here to your point, you can't drink from an empty cup, right?
Yeah.
It's be a giver. This, in like you said, you've heard me talk a couple times, but you have grown so much since the first time I've met you. Like,
Yeah.
kudos,
Right.
because but every time you hear it, you're at a different part of your journey. You pick up something different, don't you?
Absolutely. That's why I read my books more than once, because
Mhm.
I grab new information every time because I'm in a different portion of my journey at that point.
Yeah.
Yeah. Yeah.
Yeah.
And here's the thing, everybody that's watching this, you don't have to know all of this. Be like the ultra wealthy that build teams. If anybody that is highly successful has teams, and Amanda Holbrook is an extension of my team, she
Mhm.
helps me on my financial advisory side. Just like I've got teams that work with me on my disaster cleanup and my real estate, I've also got teams that help me with my taxes, help me with my financial planning, help me with my estate planning. And you find those people that have their niche that are great and top players in that area. And then you go and you pay for their services to help you, because the return on investment is so much greater than what you're having to spend. You
Mhm.
stop looking at it as an expense and start seeing it as an investment, because anytime you bring someone with great skill sets into your team, and they don't have to be W-2. Notice my team members, I don't have any ownership in specialized trust.
Yeah.
Amanda does not work for me. She works with me, but
Mhm.
she is great at what she does. And I don't have to learn all this information. So therefore, I get to cheat time. I get to take her time that she's invested into that and leverage her experience into my life and my finances so that I'm much better than what I was before. So don't sit here and get overwhelmed by this information and say, man, I'm just not absorbing this. She just named off this SBR 23, sounded like we were getting into
Yeah.
Star Wars or something. Yeah. That's all good. I understand that feeling. So just make sure you reach out to a specialized person like Amanda and her company, and then you just tell them what you want to do. You say, hey, here's what I would like to be at this age, and here's what I would like to do, and here's where my interest. Then they pull their brain power, their understanding, their skill sets, and they say, this is how you're going to do it.
Yeah.
So you find a who to tell you the how. You just got to paint the
Oh, I
vision.
like that.
Yeah. Yeah. So don't get overwhelmed. Keep it simple and leverage your experienced team members in
Yeah.
your life.
Because everyone's at a different part of the journey. And I mean,
Yeah.
guys, what I do is it's freaking the Internal Revenue Code. If you have trouble sleeping, read that. Like, it'll put you to sleep. And it's not plain English, So please don't get overwhelmed by the technical piece. That's our job. My
Right.
gift, my ninja skill, if you will, is just relaying it to you in plain freaking English. So you can use these tools, to plug and play. And all of it might not be relevant and only a sliver of it, but it's just painting that big picture so you know your action steps. So you're optimizing your time efficiency,
Right.
you know.
Right.
And the other piece too, I wanted to just touch on, just for full transparency, it's not expensive to self-direct. It
Right.
is a fraction of actually what you pay for managed accounts on a traditional platform. You're at like, 1 to 1.5% or less as your account grows, to give you an idea. And for 401ks and you small business owners listening, guess what? You get a tax credit for any small business expenses you pay for an account. So it's not expensive. And we pad in a ton of education, do we not? You
Yes, most definitely.
A lot of hand holding, so you don't need to know. I will tell you the A to B, the B to C. And I always joke, I'm like, you're going to forget everything I just said. And that's cool.
I have.
Just call. And you just call us, right? Like, I know you told me this before. What are you gonna do? I'm like, oh, let me get a team member on it. Got you.